So capital gains tax is tax due on the sale of assets, so that includes investment shares or the sale of property, but that excludes the sale of a main residence, and capital gains tax is due on any assets sold above the annual allowance for individuals, which currently stands at £11,100. Well, the only tax break that we were expecting to come in from April 2016 was announced in the summer budget of last year, where George Osborne announced that for any taxation on dividends, the first £5,000 of income would be tax-free, and that's effective for everyone. So that was the only tax break we were expecting. So this new 8% tax break for higher and basic rate taxpayers was a really unexpected surprise. And fundamentally what this means is, by bringing this new tax break, it means that Britain now has some of the lowest rates of capital gains tax in Europe. Well, one way of ensuring that they can afford it is by excluding certain people from the new rates. So fundamentally, they will not be included for landlords on the sale of buy-to-let properties. So they will still be paying the old rates of capital gains tax, so 28% for higher rate taxpayers and 18% for basic rate taxpayers. So by excluding this group of people from the new rates, they'll be able to claw back some of the lost revenue. And it's estimated that the Treasury will lose 2.8 billion, or it will cost the Treasury 2.8 billion over the next 5 years by implementing these new CGT rates. Well, the government estimates that 130,000 people are going to benefit from the new reduction in capital gains tax. That includes both higher rate and basic rate taxpayers. And the main reason why the government brought in this reduction of capital gains tax was to encourage investment in stocks and shares rather than in property. So this means that it's going to effectively help businesses, because it's been more attractive to invest in businesses and their assets and shares. So by doing that, it's going to take the incentive to invest in property as a safe haven, as it's seen as, and invest in companies, which therefore is going to increase and help the economy. So with the new capital gains tax reductions, everyone's going to benefit who are invested in stocks and shares because by seeing an 8% reduction in the tax that they were likely to pay on any gains, it's going to mean that they're going to have more money to enjoy when they come to sell their assets. And I think if anyone's got any questions with regards to how this is going to affect them and their investments, then please speak to your Courtiers advisor and we'll be happy to discuss it with you.